Hey guys, welcome back. In today's video, I want to do a backtesting session with you and just model this trade that I had constructed theoretically inside of Tastyworks. I was looking at potentially an Iron Condor on Square, putting this trade on April 8th toward the end of the day. So we'll actually look at the technical chart so you can get some insight into what I was seeing and why I wanted to consider putting this trade on, but without actually putting the trade on for monetary risk. I just wanted to model the trade in theory so I could backtest it and see how the trade would have basically performed, how much money we could have made, and how much risk we're putting on. One of the things about these credit spreads is it can be a bit scary when you're looking at your max loss on these things. So I want to talk about that, what you should and shouldn't worry about. So a lot to go over in this video. Hopefully you guys find this very interesting. It's always great to learn new strategies and new ways to trade, and trading option spreads can be kind of confusing. So hopefully this software, using this with you guys and backtesting in the video, will help you out in that regard. So if you guys are new here, I'm Tex and I share my journey with trading and investing in the stock market. As always, guys, I really appreciate you watching. Let's go ahead and roll the intro and get started with the video. All right, guys, so before we start modeling the trade inside of this software I'm using here called Option Net Explorer, let me just show you the trade that I modeled inside of Tastyworks. Now, I was putting this trade together on April 8th. You can see right here. No, you can't. I got to get a different color for you. Right here, you can see the date is on April 8th, and this is basically just an Iron Condor trade. So going through the structure over here, you have your put leg, so I'm shorting the 237.50 put, and I'm going long the 222.50 put. For the call leg, I'm shorting the 285 call, and I'm going long the 300 call. Now, the reason that I picked those strikes, other than the fact that there was enough premium in those to collect a decent credit, it was because of the technical chart. So let me show you the technical chart on Square and what I was actually looking at. So Square had this nice run up here, and the day that I'm actually looking at this trade is right here. This is April 8th. So basically, right toward the end of the day here, about right here, is when I was pricing this particular spread. And so we're going to model this trade as if we had put this trade on right here on this day. Now, this again, for the strike prices, I picked the short strike on the call side was 285, right? So that is right here. That is our short strike for the call side. Now, I'm sure you can guess why I picked that strike price, because you've got your all-time high sitting right there. Now, I would have actually liked to gone up just a little bit higher, but there just wasn't any more premium above that because of the short expiration cycle for this particular trade, right? I was looking at only an 8-day to expiration trade. Usually, Iron Condors, you're putting them on with a long time till expiration. So obviously I'm just playing off of this extreme move higher on the stock and the probabilities of, it's probably not gonna just shoot straight through the all-time high. Again, trading is all about probabilities, guys. And so you have this big run up here. It's obviously getting short-term extended. So what are the odds it's just gonna keep going all the way through that all-time high, right? I mean, it's probably pretty low. So playing off of the all-time high there on the call leg, on the put leg, was coming in short the 237.50 put, which is about here. Now, the reason obviously I went with that is because you have these moving averages here, which again, with the benefit of hindsight, we can see that so far it's pulled down perfectly where we were looking for it to stay above. So playing off the fact that we had those moving averages that we broke out of here, we're trading above them, that they would probably provide some kind of support to the downside. We probably wouldn't just come crashing straight back through them, because those are pretty major moving averages. You have your 50 SMA and you have your 20 SMA. And they're stacked up together, so you have a confluence of support. So that was the technical reasons behind the strike prices on that particular spread. Plus, like I said, the fact that there was enough premium in those particular strikes to put a decent trade on. Now, other technical levels to make a note of, right? So we had a pivot high right here. And the day that I'm looking to put this trade on, we broke that high, right? So here's the day we're looking to put the trade on toward the end of the day. We actually broke above that pivot high. So that's noteworthy. What else do we have overhead? Well, you have another pivot high right here, right? So this is where prices traded up found resistance, and then had a reversal, right? So those pivot highs or pivot lows, those are always very important levels. So you can see that that is where we traded right up into on this particular day that we're looking to put this trade on. Furthermore, we also have an unfilled gap, right? So right here, we have the bottom side of a gap, and here is the top side of the gap. So I was looking at this like, okay, so if I put this trade on, I feel pretty safe with that 285 call because we have a bunch of resistance here. Maybe it goes for the gap fill and then pulls back. And obviously with the benefit of hindsight, we can see that it did go for the gap fill and it actually went over the gap fill before we finally got a nice pull in the market as well. And we came back down on this day. So we're going to see how the trade would have profited if we put it on here with the next 2 and 3 days. Really, the stock kind of moves higher. And then finally on this day when we got this move down. All right. Now let's go ahead and head over to Option Net Explorer. We're going to model this trade. So we have it set on square. We're looking at the April 16th expiration cycle, and we're putting this trade on April 8th. So really not very long until expiration. And toward the end of the day, we have the time set to 1500 hours. So coming in on the call side, again, we're going to go short the 285. And for this particular trade, I guess let me mention that really quickly here. For this particular trade, I was wanting to model actually putting on a decent amount of risk, right? So you can see that we're actually looking at buying power for this trade would be $20,325 because we are talking about 15 lots, right? We're talking about 15 contracts on each leg. So one of the things that, and you can see the max profit potential here is $2,175. So $2,175 profit potential for a max risk of $20,325. So one of the things I want to talk about really quickly here is when you're looking at the risk to reward on these trades, which when you just look at this, it can seem really scary. I mean, yeah, first of all, we're taking some decent size here with 15 contracts. So of course, the risk is going to be greater than when we're just doing one lots. Hopefully, when you're learning, you're just doing one lots as I am right now. But with this trade, talking about modeling doing some risk here to see what it would do, yeah, that can look scary, right? But you have to remember that that max loss is at expiration. So essentially, for us to realize this entire $20,000 loss, the underlying square would have to trade above our entire call spread or below our entire put spread. So then we have to ask ourselves, well, what are the odds of that actually happening? Well, statistically, you can actually see here, this trade has an 80% probability of profit. So it's telling us that it has an 80% of making at least 1 penny at expiration. You can see here that it has a 92% probability of profit it has a 92% probability of getting a 50% profit. Okay, so 92% chance that you'll get at least a 50% return on the trade. So that's really high probability. Like I said, we know that the underlying would have to trade through our entire call spread or our entire put spread at expiration to realize that entire $20,000 loss. So even if it were to, say, open up really high or really low the next day because of some positive or negative news, what would we be looking at loss-wise? How high would or how low would Square have to open up outside of our spreads to basically be down that max loss? So we'll look at that. We'll actually model that in the program so you can get an idea of just how far the underlying would have to move, how big of an overnight gap essentially the underlying would have to have in order to be down that much. Now, of course, when we are taking any trade like this, we do have to be okay with this number, right? This is absolutely Armageddon, worst case scenario. We have to be okay with that number. I mean, we're not going to be happy about it, but this number can't completely destroy our account, right? You have to be okay with that number so that you would still be able to trade the next day, but this is like a you know, I don't know what the odds are, 1 in a million or whatever. This is, so we have to be okay that this could happen, but let's look at what actually would have to happen to realize that kind of a loss. And then also remember that with options, we have options. We can make adjustments to this trade in order to mitigate this loss if it does have some kind of move against us that was unexpected. Now, with a shorter term trade here, we're only talking about 8 days to expiration. It does get a little bit more difficult to make adjustments, but there's usually always something you can do to mitigate that loss. So always keep that in mind. Just because you see that max loss doesn't mean that you have to realize that max loss. We can actively manage this trade. All right, so now with that said, let's go back over and go ahead and model the trade. So we come over here, again, we're on April 8th at the market close right there. So we're coming in on the call side first. So we were shorting the 285 calls and we're doing short 15 contracts. And then we're coming in long 15 calls at the 300 strike. All right, so 300, 285. Perfect. Now we come down to our put legs. We're shorting the 237.50 puts, which is here, minus 15. And then we're coming in the 220, 250 puts, which is there. Perfect. All right, so long 222.50, short 237.50. Great. So we have our trade established here. What I'm going to do is just go ahead and commit the trade. And at the time, the spread was trading for, at the time that I was modeling this trade in Tastyworks, the spread was trading for $1.45 mid price. So we're just going to assume getting filled at $1.45 mid price so that all of our stats remain the same from the screenshot here. So that looks good. Now for our profit target on this particular trade, remember that we were talking about a max profit of $2,175. However, the odds of capturing that entire max profit are, you know, obviously not as good as just capturing some of that. And really, that's what we should be shooting for. So with a $20,325 investment, if we were to capture that entire max profit, that's a little over a 10% return. So thinking in terms of percentages as an investor, if you're investing $20,000 of your money, to get a 10% return in 8 days, obviously that's really good. Now, more realistically, let's just say cut that in half. Maybe we go for a 5% return. So instead of doing 10% here, let's change this to a 5% profit target. So that is a 5% return on our investment, or in other words, our capital that is at risk. We're going to shoot for a 5% profit target. I will just leave the max loss at 15% just so you can kind of see how that would look on the risk graph. So obviously we're going to actively manage this trade so that we do not realize that entire $20,000 max loss, but we'll give it room. We'll give it a 15% max loss there, okay? So we'll just model that, click on save, and there you go. We have our trade established. Now I'll just quickly run through some of the things that you're seeing here. Just make sure you can see everything on the screen. So this is where the spread is currently trading at. You can see this kind of red circle there. And then you see all of these other red circles, red dots all along this area here. These are all price points where the spread traded during that day. Okay, so you can see obviously the spread has the bid and ask, you know, the actual price of the spread, the mark of the spread is moving up and down throughout the day as the underlying moves up and down throughout the day. Across the bottom of our risk graph here, this is actually telling us what the price of the underlying is. So you can see at the time we put the trade on, Square was trading at $258.32. And obviously if Square trades higher in price, then it's going to move that direction. And if it trades lower in price, it's going to move that direction. So we can see how the spread is going to become profitable or a loss based on the price movement of the underlying. So if I just clear this off and we do a line like this, you can see that, and I just want to make sure you can see everything on the screen, right? So you can see right here, if I bring this down like that, the area of max profitability is right here in this area, right? So essentially we need square to be around $260. It's a little hard to see, but right underneath of here is $260. So with Square trading around $260 a share, this spread has the potential to be the most profitable. And the reason being is because you can see this profit and loss curve that comes up like this. This is your profit and loss curve in real time, okay? This one here is your profit and loss curve at expiration. So we don't really care about that one because we're not planning to hold to expiration. We care about this profit and loss curve here in real time. We want to see how the spread is trading from one day to the next, 1 minute to the next. We'll be able to actually do a playback and see how it trades, you know, in 5-minute intervals, 15-minute intervals, whatever you would like to do. So furthermore, if we look at this, you can see that obviously here is our break-even point, right? So we have this line across here. This is our break-even point on the spread. So if the spread moves up here, we're in the money, and if the spread falls down here, we're in the red. And if we see how the curve is drawn, right? So if Square starts to trade higher in price, if it starts to trade too high, the spread will actually start to lose money down here on this side. And if it has some reversal and starts to sell off, the spread will start to lose money on this side. So right now the spread is trading, Square, the underlying, is trading pretty much in the area we need it to be for the spread to be the most profitable. But the problem is that we need a little bit more passage of time for this spread to decay, because remember, we sold a credit. So essentially we want the value of those option contracts to continually decrease so that we can keep as much of that credit that we collected as possible for our net profit at the end of the trade. So you can see our max loss is marked here, right? So we're looking at a $3,000 loss if we're going to stick with that 15% loss on our investment. And our max or our profit target is $1,020, which was 5% return on our investment. So it's got some work to do, right? This curve here needs to start moving higher. It needs to start moving up towards that profit target for us to get into the money. And you can see exactly, you know, where you're going to start hitting your max loss by using this right here. So based on right now, as of putting the trade on, if Square were to trade down to $241.80 or so, we'd be at our max loss of $3,000. That's minus 15% of our investment. That's where we'd have to actively manage the trade to either take it off for a loss or make some kind of adjustment. On the upside, if Square traded all the way up to 278.85, we would be at our max loss. So looking at the chart, 278.85, that's going to be, well, that's going to be right here, kind of the high that it hit here. Now, again, we're putting the trade on this day right here. I'll just do this, just draw this on here for you guys. So here is the day we're putting the trade on. All right, so this is the day we're putting the trade on. So for us to hit our 15% max loss, Square would have to trade up to, on that day, on this day here, Square would have to trade up to about this area here, right? So it looks like, in hindsight, that it does trade up to our max loss zone. However, it does it several days later. So let's see what that actually looks like as those days go by and the spread actually trades. All right, so that's everything that you probably need to know. Down here, you can see your profit and loss, right? So you can see your profit and loss in dollar and percentage as the day progresses. We'll see that move. You can also track it down here. You can see your profit and loss in dollar and percentage. Okay, so let's go ahead, and then you'll be able to track what day and time it is right here across the top of the platform. All right, so let's go ahead, and we're going to do this on, trying to decide if we would do this on 15-minute intervals, I guess, and then we'll hit play. All right, so we just started. Let's slow it down too. So we just started Friday, right? So it's Friday, the market open, and you'll see that right now we're about break even on the spread, but you'll see that we're actually very close to being profitable, right? Once again, here is our break even line right here, and you can see that the spread is starting to show some signs of profitability here. Now, if we look at the technical chart, the next day after we put the trade on is here. So we'll move this. Let me turn this off. We'll move this here. So here is the day that we're now trading on. You'll see that we actually opened with a gap down, right? So the previous day when we put the trade on was here, and that was the close. The next day we opened with a gap down, but we do manage to trade up higher during the day. So this is the day we're looking at. Let's hit play. Okay, and so let's just track the spread performance here. So you can see that now the spread is moving into profitability. Now we're up about 400 bucks on the spread, and that's because Square is trading relatively close to that 260 price point. Now we just don't want Square to trade too much higher, or else the spread will become not profitable. And if it trades too low, obviously it won't be profitable. So we're kind of close to the sweet zone. As you can see, the spread is hovering right around a few $100s in profit, and we're going for that profit target around $1,000. So it still has some work to do to get there. So it's about 2 o'clock on Friday, April 9th, the day after we put the trade on. And we are coming up to market close. So let's just stop it right there. So here is the market close on Friday, April 9th. So this is 24 hours after we put the trade on. And we can see that the spread is up $697.50. So we are about halfway to our profit target right now. And you can kind of see that again, right? So here's our break-even line, and the prices for the spread are trading above the break-even line. So of course we are profitable, but that curve here hasn't quite come up high enough to our profit target. So we've got a little bit more work to do. Let's go ahead and advance time. Now we're going to jump to Monday. So here's the market open on Monday, April 12th. So you'll see that because of the passage of time, right? Because of the passage of time, this curve has moved up a little bit higher, and it has gotten really close to our max profit here. The spread looks like it's opening around $855 profit. So we're getting very, very close. All right, so let's just advance time. Let's go to a 5-minute interval, and we'll just hit play, and we can speed time up a little bit. So here we go, and I guess let me look at the real quick, the technical chart. So again, we're opening up here on Monday, April 12th. What does that look like on the technical picture? Right, so here is the day now that we're trading in question. I can grab this thing. So here we go. So we actually opened with another gap down, right? So on this day we closed here. The next day we opened with a gap down, but we do manage to push up and put in a new high on that day. So again, let's hit play and watch this play out for a moment here. So you can kind of see, right, the spread is trading around 660 bucks, 3.5% there. And you'll see, obviously, as the price of the underlying, as Square trades higher and lower, you'll see the price of the spread moving around here. All right, so we're hovering right around that $800 mark. And, you know, when we look at this, obviously, it's so close to the profit target. It would be tempting. It certainly would be tempting to go ahead and take it at about $800 instead of going for that last couple of $100. But of course, we're just going to play this out and see what it would look like, right? If we didn't do that, if we held out for that potential profit target. So it is getting into the afternoon here on Monday, April 12th. We're coming up to the 2 o'clock hour right now, and the spread is still trading around $800 or $900 now. So it's looking like right here. It's looking like right here near the close, we could have probably gotten out for about a $900 profit or so, depending on obviously the spreads on the bid and the ask and everything. But it's looking like we just about came to our profit target on that day. All right, so now the market has opened the next day. It is Tuesday morning, April 13th. Let's look at the technical chart. So that's on this day here. And what happened here, right? So the prior day's close was here. We actually opened with a gap higher this time, and we actually had a push up. The high of this day hits 275.45. So at this point, now it's starting to push up closer to our call leg, which remember, our point of max profitability was going to be closer to 260. So we really wanted Square down here in this area for our max profit zone according to this profit curve. Okay, so here's 260 on Square. So right here in this area, around 260 to 264, maybe somewhere right in here is where the spread would be the most profitable. So since Square has opened with a gap higher and is trading higher this day, look what's happened now. The spread is losing money, right? We're down 367. So the prior day, we were within about $100 of our profit target. We didn't take profit. Now the next day we open up with the spread going against us. So let's just hit play and see what happens. So we know that, you know, Square opened with a gap up and it does trade higher on that particular day. So as the day progresses here, you'll see that we actually are flirting with red to break even to a little bit of profit. And obviously as spread, you know, pushes higher and then has pullbacks and pushes higher and has pullbacks, the spread is going to go from not profitable to not profitable. You can see that here with the color dots, right? So in this area, we have profitability on the spread, and down here we have the spread not profitable. So as of right now, the spread is back to being up about $400 or $500. There's $700 right there. And this is at about 10 or 11 o'clock in the morning on that day, on this day here, right? We're still on this day here. It's about 10 or 11 o'clock in the morning, and the spread is back to being profitable. So we were given a chance to take profit here on this day if we wanted to, but we wouldn't have been able to realize as much of a profit as we did or we could have on the prior day. So let's just let this play out. We're in the lunch hour now. Spread is profitable. We'll just speed time up, right? So 12:15, 12:20, looking like spread is going to not profitable as Square has another push higher. So really kind of flirting between profit and no profit as we get into the afternoon trading session here on Tuesday, April 13th. We are coming up to 2 o'clock. Here is 2 o'clock. Spread is not profitable. We're down $480 for a moment there. And we're getting close to market close. Okay, so here is market close for that day, Tuesday. And it looks like we're closing down $30 on the spread. So looking at our technical chart, it looks like the next day opens with a small gap higher. It has one last push, and then the bottom falls out. So now we're going to look at this day here, and let's see how the spread opens on this day with a small gap higher, one last push up, getting closer to our call leg, and then what it looks like when the bottom falls out. All right, so here we go to the next day. So Wednesday, April 14. Looks like the spread is opening down $292.50. I'm just going to manually go ahead in time. So here's 835. We're down $622. And then we go to 840. We're up $225. So what happened there, right? So Square opened at 274. And we can see what the last price is here, 275.26. So we advance to 835. Square pushes up to 276, so of course the spread is going to go more red. Go to 840, Square is at 274, and now the spread has gone profitable. So that was that last push up, and then now Square is starting to come back down. So now we're profitable on the spread. Let's go to 845. Square's already down to 272. Spread's up to $480 profit. Moving to 850 in the morning. Square is now down to 270, so it's falling quickly, right? So you can see here the pricing of the spread is quickly moving up into our profit target zone. The spread is now worth $787.50. We move to 9 o'clock in the morning. Square is still trading around 271 a share, and then by 9:05, Square drops to 268. So Square dropped dramatically there. It dropped a couple of points. So we're getting back towards that max profitability zone here around 260. If Square can get down to 260, that's where we're going to get the most profit out of this trade. Right now, the spread is trading for $1,140. So we've hit our profit target. So right now, we could be taking this trade off for our exact profit target. But let's just continue to advance the time a little bit here. So as Square trades down, right, as Square trades off this day, as Square sells off this day, As we continue to advance time, it's down to 265 now. The spread is trading for $1,387. And let's just keep advancing the time here. It is 10:15 in the morning. Continuing here, and we want to see what Square looks like when it gets down to that 260 mark. So it was there for just a moment here. At 11 o'clock, at 11:10 in the morning on that day, Square was trading at $261.96, and the spread is up to about $1,485. So we're getting pretty darn close to the most profit we could see this day. Let's advance the time a little bit more, see if we can get to 260 on Square here. Here's noon. Square's at 263, 260 right there. So at 12:55 in the afternoon on that day, Square hit a price of $260.63, and the spread is trading for $1,522.50. And you can see that's right at the top of that curve. So that really is the best that we could have done on that day. If we had held through all of that, that is probably about the best we could do. The only thing that we could do better is to hold this until expiration and hope that Square closes somewhere in between our break-even points, right? So on the upside, this is our break-even point. On the downside, this is our break-even point. Those dashed lines, that's what that is marking. So you can see, actually, I should mark that a little bit better. Right here is our break-even to the downside, and right there is our break-even to the upside. So you're looking at 235.87 there on the downside, which of course we shorted the 237.50 put. So you take into account the credit we received, so our break even is a little bit better than that, but there it is. And on the upside, it's about around 286.36 or so. So obviously, if we hold this to expiration, we would really hope that Square stays inside of this profit cone here. But the problem is that when you get that close to expiration, gamma can really come in and hurt you badly. So even if it does stay inside of here at expiration, you can go very red on the position. If it really comes down and starts testing one side of the Iron Condor, you can go extremely red on the position with just a day or two to expiration, and you really just don't have much room to do anything with it at that point. So the safer bet would be obviously to take our profit at the profit target here. So that's what the trade would have looked like. That's how it would have played out. Now I want to show you, let's go back to the start of the trade, and I want to show you what it would look like if Square had some kind of a gap higher. Maybe they had some kind of good news that came out overnight after we put the trade on. And let's look at like how bad of a loss we'd be looking at if the stock would have gapped higher. So let's just jump back over to, I think it was April 8th. And it was 1500 hours. Was it April 8th? Let me double check. Yes, it was April 8th. All right, so we're right back at the starting point for the trade. We just put the trade on. Let's do this. Let me see, how do I do this? So theoretically, here we go. So let's say it's April 9th, and that's the day after we put the trade on. And let's say that Square has some kind of big gap higher, right? So we put the trade on here. We put the trade on this day. And let's say that Square has some kind of really good news and it opens up here. It opens up like right at its all-time high or just above it, like right about 285, which our short strike again is 285. So let's say that Square opens up right at our short strike the day after we put it on. So theoretically, we come in here and put in 285 right there, and you can see that our profit and loss here, we would be down $5,000 on that position, or a 24% loss, almost a 25% loss on our investment. Now that would be, like I said, with Square having some massive gap. I mean, we're talking a huge gap, right? Opening like this entire gap here. It's certainly possible, but in terms of like, what is that in percentages, right? If we come up to here, you're talking about a 10%, right? You're talking about a 10% gap higher on Square. Sure, it's possible, right? But the odds are not very high of that happening. There would have to be some kind of, catalyst that you couldn't have foreseen that would cause that to happen. So when we were looking at this trade originally, remember we were looking at, $20,000 in risk. And that can seem really big and scary. But the point that I'm making here is that you have to realize that the odds that you're actually going to realize that loss are just incredibly low. But let's continue to say, what if Square had gapped up even higher than that? What would it take for us to literally open up the day after we put the trade on with some massive gap against our position? How far would Square have to gap higher for us to basically be down that $20,000? So if we come back over here, let's say, what if Square trades opens up at $300? Maybe it just has some big massive gap, and that 300 whole dollar seems to be where it settled and where it opens up the next day. So let's come in here and put in 300. Now you can see, even if Square went all the way up to $300, the spread is going to open up down $10,000. So we're looking at just over a 50% loss on our investment. So yeah, that's going to hurt. Absolutely, it's going to hurt. But it's not that entire $20,000. Okay, so just to kind of put that into perspective, let's just keep going, right? If we go to 320, now we're getting closer to almost 100% loss overnight. And that would just be an incredibly outsized move, right? If we measure that out in percentage and just look at this. So from where we put the trade on to 320, that's a 24% move. So a 24% gap overnight. That would have to be some incredibly bullish news. We know Square doesn't have earnings coming out before the trade expires, so it can't be anything like that. Now, it could happen, of course, but that's what it would take. Square would literally have to gap up, in this example, 24% overnight for us to literally wake up and be down almost our entire max loss of $20,000. So hopefully that helps you out in that regard. Like I said, I know it can be a little bit scary when you're putting on these trades and you see that big max loss number compared to your profit potential. But you just always have to weigh the probability of profit on the trade, and you can actually measure it out on the chart. The software helps you do that. You can do it in Tastyworks here as well. You can see what the spread theoretically would be trading like, or would be trading at if you were to open up around $320 a share, for example. It'll just give you a really good idea of what it would take to come close to realizing this loss, and that should give you a little bit of comfort realizing that the odds of that happening are incredibly low. So at the end of the day, yes, we do have to be okay with that number, so we want to make sure that we're sizing appropriately on our trades. You don't want to be just going in with all of your buying power, because then you would have nothing left to make any adjustments to the trade. And obviously it would just completely wipe you out if that catastrophic loss were to happen. So I will wrap the video up there, guys. Like I said, it's really fascinating to go in and backtest these strategies. I have some other trades that I kind of constructed in theory that I want to do some backtesting on. So if you guys did find this video interesting and you'd like me to make some more videos like this where I'm doing backtesting and things like that, be sure and let me know in the comments below. I appreciate your engagement in the comments. It helps me decide on what kind of content I should make for you guys. But like I said, yeah, I will wrap it up there. If you guys have any questions or comments, of course, post that below as well. And be sure and hit the like button. So I really appreciate you guys watching. Thanks as always. And hope you have a great and green week of trading. And we'll see you in the next video.